How's it going, fellow traders? How you doing? How you doing? It's Magic Trader here. Glad that you can make it with me. I know it's been a little bit of time since our last session, but you guys still love me and you guys are still hanging around, so I appreciate it. We're going to be taking a look at the latest CFTC data. When I was doing the report for members this past weekend, I was quite surprised to see some of the things that I saw in the latest data. So I want to go through that with you. Just a brief overview. I'm not going to go into much detail like I did for the members report, but just a brief overview of what I see, things that I think we should pay attention to, okay? So as I always like to do, I always like to start by taking a look at the snapshot, okay? Here is the snapshot of the positions held by the institutions, all right? You guys can hear me okay? Everything good? All right. So I will first bring to your attention one of the columns here, okay? The change column, okay? This is the one that we always look at first. At least this is the one that I like to look at first, okay? We'll do red so it sticks out a little bit more, okay? When I look down here, the first thing I see is Euro US dollar, right there. You see that? Euro US dollar, a change of negative 35,000, right? This is what I see. And do you see what's happening with the Euro US dollar right now? Have you guys been following the $1 million trade that I placed back around Christmas time? Okay. I posted the trade before it moved, all right? So you guys could see that the logic that I'm applying for this trade is playing out, all right? If the logic was incorrect, then price would be doing something different. But you know, we applied the Sherlock analysis process to the charts, and what we concluded was that it was very likely the Euro US dollar was going to be dropping. So I opened up $1 million trade, I added another million, and I added a third million. I'm short 3 million on the Euro US dollar. Okay. All these trades have been given out live before the move took place. Okay. So that you guys can see the thinking, the process, how I manage my stops, how I manage my risk, and all that stuff, okay? So I'm looking at the data, and last week I was mentioning to members, I said, listen, what I want to see, because one of the reasons why we collect this data and we look at it, there's a reason why, all right? It gives us a lot of insight as to what's going on in the market, what the banks are doing, what they're thinking, but overall, there always is a storyline that's playing out in price, okay? There's always a storyline. There's always an agenda, all right? If you don't know what the agenda is, you have to start using some kind of a process of collecting data to determine what the agenda is. So, like I said, back around Christmas time, after doing some analysis, well, this goes back, you know, months, even before Christmas, but back in Christmas time, the reason why I initiated the trade was because within the storyline of what was taking place in price, it was becoming very evident to me that price was about to drop with significant momentum, all right? And I figured, well, now's the time to get into a trade because I want to open up a trade and I want it to go in my favor immediately, all right? I don't want it to go against me. I want it to go in my favor and I want it to keep on going quite dramatically and for a long period of time. So my risk to reward on this trade is massive, okay? My risk is small. My upside is massive, all right? I don't go for one-to-one trades or one-to-two trades. That I don't bother with. I want big upside. If I'm going to risk my money, I want to know that I'm going to get a big potential return on it, okay? So leading up to this last set of data, along the storyline, what I came to the conclusion of was I needed to see that the banks were starting to become more aggressive with their shorts, okay? I needed to see some kind of bearish pressure just to confirm that the storyline is playing out as we expected. And, you know, if I saw this take place, it would help build up the confidence in holding the trade. Because when you hold a trade for a long period of time, there's going to be a lot of significant moves that are going to take place. Some to the upside, some to the downside. It's like, you know, a storm that comes in and you're on that boat. And you got to ride those waves and it's going to make you sick and you're going to want to throw up. But if you have confidence and you have a strong foundation, you're going to feel very strong holding through those waves, okay? Because eventually the skies are going to clear, the wind's going to blow, and you want it to blow in the direction that you want it to blow it in. And right now, we're seeing the euro US dollar drop. The skies have cleared, the wind has come up, and it's blowing to the south. And we had an indication that the winds were going to blow to the south when we saw this data, okay? So I see this data, I see negative 35,000. Great, that's significantly bearish, and that helps with us holding our short trade. Then I go further down. We also have the Aussie, okay, 33,000. I go further down, I see copper, and then boom, look at this, S&P 500, okay? I'm scanning the media, I'm scanning the news, and what do I see? All these headlines about the market making new highs. This is incredible, 20% to the upside, but we needed the previous highs to be surpassed, and so now that's happened, so that means we're in a bullish trend now. How long should this bullish trend? All this is very nerve-wracking for me when I see these headlines. I mean, if I was to think about just trusting the headlines, and then I see this data that shows the banks are massively short the S&P 500, I'd be very nervous. Now, I'm not long the S&P 500. I'm long many stocks that pay dividends that I've shared with members, and those trades are doing remarkably well, okay? And the reason being is, well, I won't go into that. That's another session. But they're doing well because the fundamentals are there and because the institutions are buying. That's the be-all, end-all, okay? But going back to this, when I look at the S&P 500, I see a massive 139,000 in the negative. That's a lot of bearish pressure, okay? A lot of bearish pressure. So with that in mind, let's go forward and start looking at gold and oil and the currency pairs, okay? And then later on, we'll go to S&P 500 and I'll show you what's happening on the charts. So here's the thing. Remember what I was talking about in terms of the storyline of price, right? The storyline with the euro, one of the storylines is that the banks had accumulated a long position, all right? And they've been holding that long position for a long time. So with respect to the dynamics of what's taking place with supply and demand on the charts, because we had massive supply in play, what do you think typically happens when massive supply is in play? You have a sell-off of long positions and an increase in short positions. That's what typically happens, okay? Does it happen every single time a supply comes into play? No, because many times those supply zones are removed. But you have to understand the dynamics of price to understand whether that supply is going to hold or whether it's going to be removed. Now, according to the analysis that we did on the charts, we discovered that there was a high probability that the supply in play was going to hold. So if that's the case, if that's the thesis, what do you think we need to see with respect to the storyline playing out with the CFTC data? Well, you probably guessed it. We need to see long positions being closed off, okay? And so gold and the euro are somewhat correlated. If you take a look at the charts and how they move, you'll see that there's a correlation between the two. So I'm looking at gold. And gold is at the 290s, January 2nd, 290,000. Look what happened over the last couple of weeks. 271, 262. I see that, and I'm with my thumbs up. Because I'm thinking to myself, this is exactly in line with what I've been expecting to see. Now, am I looking to trade gold right now? No, I'm not, okay? We have very specific long signals that we're waiting to trigger, and those have not been triggered yet, so I'm sitting on the sidelines. And I don't think any specific move is going to take place right now in gold. And the reason being is because of what is taking place with the euro, okay? I think the euro US dollar is driving the whole currency market right now, okay? And this storyline that we are following. So you see how essential it is to understand the storyline that's taking place? You need to know who's the main character and what's their storyline. Because all the other extra cast, you shouldn't be focusing on those. Because they're going to come in and out of the scene, and you're just going to be confused. Like, what's the purpose here? What's driving this storyline? It's the main character that's driving this storyline. If you're following the main character and you know the storyline, then you can predict what is going to happen in the future. Okay? This is why you can open up a $3 million short trade and hold it through this whole time. So I see this with gold and I'm liking it. All right. So let's move over to oil. What do we see with oil? Longs. Let me ask you a question. When you look at long positions, what are you thinking? Are you thinking that Are you thinking that the banks are really focused on longs right now? Look at the coloration of the cells. They're blue, correct? Okay. And they've been blue since October of last year. So that means those positions are cooled off. That means there hasn't been a major focus on long positions in oil for quite some time. Now, if you look at the short column, what do you see? You see spurts of red, okay? They went from cooled off in October to November becoming a little bit more, and you can see that here with the clouds that I have drawn around price action. The reason why there's dark red clouds around price action is because that represents to me where the institutions were aggressive with their short positions. So they're aggressive with their shorts, which caused price to drop down into the demand area. So what's taking place right now? Well, not too sure, because you look at the sentiment, what do you see? We went from green to blue, a tinge of redness. But putting things into context, why is there a tinge of redness? Why is there a tinge of bearishness? Well, because we just dropped inside of a demand zone. All right. So now I sit back and I wait, because there isn't anything strong here for me to base a trade off of. Okay. So I'm just waiting. The storyline is it's telling me something. It's leading towards something, but this is like a big mystery movie, right? You're halfway through the mystery. It's still telling you the story. So you don't know enough to determine what's going on. So we're waiting. You have to be patient. So we move on. We look at the dollar. Okay. And what do we see with the dollar? Look at long positions. Okay. You see how those long positions are blue? You see how the cells here have turned blue? They've turned blue, significantly blue, because I've coded my spreadsheet in such a way that when positions are very weak, they turn blue. When they're white, they're more of a neutral, okay? When they're red, they're aggressive. I like to see that. I want to know when the banks are very cooled off with their long positions or aggressive with their short positions, because that helps me to determine what the storyline of price is. So I look at longs, December 19, that's when contracts expired. Contracts expired December 19, and look, boom, they cut their position in half. Long positions in half. Why do you think they cut their long positions in half? That's something that you have to start working on. That's a problem that you have to start figuring out. And this is why I called it the Sherlock system, because Sherlock has to take the data and discover what the truth is, right? The data is there if you know where to look. Shorts increasing during that span of time. Banks close their longs in half. And what do they do with shorts? Increase. 8,000, 10, 11, 13, 13,000. So does that mean price is going to drop? No, it doesn't mean that. You have to put things into context. Remember? Put things into context. Why were they increasing? Well, what happened with price? Where's my cloud? Where's the cloud? Down here. Okay? So they were aggressive with shorts, but at the lows. All right? We look at the long and short sells. What do we see? We see that they were bullish. Okay? But that ended back on December 12th. Switching into December 19, I think it was December 17th, where they had contracts expire. So contracts expired, they removed half of their longs, and now we're more into a little tinge of bearishness, all right? But I don't think that price is going to drop, all right, just because of that. Just because there's a little tinge of bearishness, putting things into context doesn't tell me that price is going to drop, all right? So let's move forward. And we have the Aussie. Aussie is one I've been sharing with you for quite some time. We know that there is a bearish cycle that is playing out right now, and it has been for quite some time, which is pretty strange, because I don't think I've ever seen something like this for this long. The banks are not even focusing on long positions, okay? They could care less. In fact, how do I know this for a fact? Well, if I look at long positions, and I go through the history, they're mostly blue. The column is mostly blue. What does the coloration of that cell tell me? It's telling me that it's neutral. The positions are so cooled off, the banks aren't even focusing on them. All right? What are they focusing on? They're focusing on the shorts. But what they've been doing is they've been adding to their shorts, taking profits on shorts, adding to their shorts, taking profits on shorts. You see every time they add to their shorts, how price drops? You see how when they take profits on their shorts, price rallies? They added some here and then they took profits. Now they're adding again. They just started adding again. Okay, 79,000 up to 93,000. So does that mean that price is going to drop again? It's likely. It's likely. Remember how I told you the storyline of price? What does Sherlock do? He goes to the crime scene, he collects the evidence, and then what does he do? He finds the witnesses and he takes them into a separate room and he questions them. Okay? Well, Aussie US dollar is a witness to the crime. So I take them aside and I say, what do you have to tell me? You haven't been focusing on longs lately, I see. And I see shorts. You've been focusing on shorts for quite some time. Let me see what your history is. Let me see what your routines are. Let me see what your pattern is like. Oh, it looks like you just came off of a profit taking on shorts. I see. And I see you're starting to increase them again. What does that lead me to suspect? That you're likely going to drop. And what does that tell me? The Aussie drops. What do you think will drop too? Euro will likely drop. Take a look at the Aussie chart, the Kiwi chart, the pound chart. Okay, look at the euro. They move similar to each other. So if I'm seeing evidence in the Aussie that it's going to drop, does that not help corroborate the story from the euro that it's likely going to continue to drop? Yes, it does. So you see how I put these things together and it starts to paint a very clear picture on what is taking place. So I see that and I'm like, thumbs up. Good. I like that. So we move over to the next one. And what do we have? USCAD here. Okay, good one. We have a range on the USCAD. Supply above, demand below. We're reacting from that demand area and we're seeing a little push to the upside. So we look at longs. They closed off some longs. Why? Well, because price was dropping. Okay, so they closed off some longs. But they also recently reduced their short positions. We look at the coloration of the cells and what do we see? Blue. Went from bullish to now neutral. It used to be bearish, then neutral, then bullish, now neutral again. So we're in the in-between phase. Do we go bullish? Do we go bearish? What do we do now? Well, obviously we have a bias that it's likely going to go up. Why is that? Well, because the euro is likely going to drop. So are we seeing signs of that? At this point, we are not. They are neutral with this. If they start to build on their longs, then yeah, that'll be great. We got one increase in longs from 49 to 52, but that's a small increase. We'd have to watch and see if it starts to build with some significant momentum. So for the time being, there's not much to see on this chart here. US Swiss. Here's one of the great things that we saw that really supported the drop in the euro. We were looking at the US Swiss and we saw that on the chart we had significant demand that was located here. So we expected to see some reaction from there. And sure enough, we got that beautiful reaction. It was one of the things that helped us time the entry on the US dollar Japanese yen long trade that I also gave away in our Telegram group. And so we got that nice rally from that demand. We got the pressure to the upside. But again, when you look at the coloration here of the cells, what do we see? We see neutral. Again, neutral, all right? Look at longs, okay? They cut their positions back in December 19, 18 to 12. Look at shorts, extremely cooled off. So the only position that they've really been focusing on lately is longs. But they just took profits on longs, all right? But remember, this latest data represents this candle here. We're still at the lows. What took place since then? A big rally. Next week, I'd like to see them increasing their long positions because this is going to help to put together the storyline of what is taking place, all right? And it adds to the whole discovering of the big mystery that we're trying to discover here. All right, here's my baby, Euro US dollar. And so remember what I was pointing out with respect to gold, what I was looking for, okay? Look at the, let's select this again. Look at the long column here, okay? Look at that. What do you think has been the main driving force on the euro? It's been longs, and it's been for a long time, okay? But I want you to focus on what has happened over the last few weeks. Why the last few weeks is it important? Well, I'll tell you. Remember how I told you at the beginning of this session that after doing some analysis, we discovered that right at this moment, back in December, was likely going to be the point in the storyline where the banks were going to take off a significant portion of their long positions and drop price? Well, if that's the case, then we needed to see some long positions starting to get closed off. And we see this, okay? We see this right now. Another thing I'm going to point out to you, something that I really like seeing is down here. You see that 264, okay? That's when price was up here, okay? And now we're here. 204 up here. So what does that tell you? Well, think about it. If you're a large institution and you hold billions and billions and billions in a long position, what are you trying to do? You're trying to get out of that position at the highs, okay? So you know how in your conventional technical analysis books, you have the double top? Well, what do you think a double top is? It's banks getting out of their positions at the highs. They don't want to get out of those longs that they added at the lows over here and then down here. They would much rather get at the highs, get out of those longs again at the highs. But if that's indeed happening, then the amount of longs that they had here should be a lot more than the amount of longs that they have here. Why? Because during that whole process of that dip and that rally, they're offloading more of those longs. So that's one thing that I know to be true from studying the charts and the CFTC data. So when I'm looking for evidence, I look for things like that. So when I see 264, oh, previous highs there, and now we're at 204, they reduced it from 60,000. That's massive, and they're still at that high. That's incredible, all right? And they do this all the time. So it's a significant sign that price is likely going to drop. All right. All this data is pointing in the same direction, that the euro is going to drop. All right. So we move along and we have the pound, and we see that shorts are very cooled off. Longs, you know, they started taking some off, and then they added 60 to 66,000. All right. Bullish here. Bullish. Look at this. This is crazy. Bullish. They're turning bullish. Okay. And this is from going neutral back here. So is it really giving me any strong signals here? No, not really. Not really. But I'm not too concerned about that because everything else is pointing in the direction that we're going to be getting a drop. US dollar, Japanese yen. So the long trade that I was talking about was we went from here to here. Okay. I gave it out on the Telegram channel. It worked out perfectly. I placed the trade. I shared it before the move took place. Okay? Not after the fact. I didn't say, oh, by the way, I took this trade. No, I shared it before so you guys could see why I did it, how I managed it, where I placed my target, excuse me, why I placed my target where I did. And then we watched it rally and get hit. So one of the things that I've been looking at here is the fact that we have a supply zone in play here, okay? That's a supply zone. And we look at long positions and we see that they are the more, they are the position that's more in focus here. You look at shorts, cooled off, blue, blue, blue everywhere. Long, aggressive, aggressive, aggressive longs take profit, aggressive longs take profit, aggressive longs take profit. Aggressive longs, the last sell. But why is it aggressive long? Well, because look what happened with price. Okay? it rallied from where? A demand zone. What's a demand zone? It's an area where the banks are likely to buy. And do we see proof of that in the CFTC data? Yes, indeed. 90,000, 97, 100,000. See, this is what you want to do when you trade. You want to buy and you want to know that the banks are going to come in and buy right with you. That's how price moves. All right? If you're buying alongside the banks, then when you get into a position, it goes in your favor. This is why it's so important to do this analysis, because if the banks aren't with you, you're going to be sweating during your trades. Okay? All right. Last but not least, well, no, not last, because we're going to do the S&P. This is basically not the greatest chart in the world. I haven't been a huge fan of the Kiwi. It's somewhat similar to what the Aussie's been doing, but not as aggressively. If you look at the short column, you can see aggressive with shorts and then not aggressive. And we're going through that phase right now. Longs cooled off. There's no focus there. So I'm not really focusing on this one. Okay. All right. The big one. So this is the one. This is the one where I was looking at the data. I'm looking at the headlines. Everybody is talking about how price is going to go higher. And then I look at the short column here. And I see something very interesting. So I'm going to just point out to you a few cells here. You can see back in late November, early December, the cells were cooled off. They were blue, meaning there was no main focus being on shorts. All of a sudden, contracts expired. And I always tell you guys, and I always tell my members, pay attention to contract expirations. You know why? Because the banks very often use them as a way of making a significant shift in their positions. And usually when they make a significant shift after contracts expire, that shift really gives you an indication of what's likely to come. So I'm looking at it and I see a massive jump from 322,000 to 444,000 shorts. And I'm thinking to myself, holy moly, why would they open up so much short up there? Well, maybe they're going to drop price. That's a possibility, but I don't know 100%. Maybe retail traders were offloading such a large amount of short positions because price was just about to break out to new highs that the banks took on all those positions, and that's why the big increase in shorts. Maybe. But take a look here. 444,000, 443,000. Then they increased them to 471,000. And then right after that, look what they did. They dropped them down to 389. When I saw that, I said to myself, you know what? They might just be about to start rallying price up. But this latest set of data that just came out January 16, well, January 16th's data, the data that they reported on January 16, they increased them massively, 389,000 to 429,000 again. All right? So, look at the clouds. Massive increase in shorts at these highs. This makes me very, very skeptical about a move to the upside. Okay? Now, we're tracking the buying and selling of the banks. We've located the institutional buying zones. And if price retraces to them, we could get really good long signals. But I want to see what's going to happen moving forward. I would definitely not be buying the market up here. Okay? That's for sure. Would not be doing that. Because I don't want the banks piling into shorts and me buying. That just doesn't make any sense. If I don't know exactly why they're piling into shorts, then I'm not going to be making any moves. So the storyline that I'm trying to figure out here is, why did they increase those shorts? Okay? They just revealed something to me. Now, like Sherlock Holmes, he has to go back to his house, light up his pipe, and he just sits there smoking his pipe for a few hours, thinking about the problem to come to the conclusion. I haven't come to the conclusion just yet. This is just like a few weeks data, massive shorts, what's going to happen? I've been collecting evidence. I've been collecting information. I'm looking at what the news is saying, and I see very bullish headlines, which makes me think, boy, oh boy, this is probably a setup for a drop. But then we also have the Nasdaq. I think I got the Nasdaq data up here. The Nasdaq is telling me a different story, guys. Look at the longs, okay? We've had a significant increase in longs for quite a steady period of time. Look at that December 19 contract expirations. What did they use contracts for? To excel their longs. What did they do with their shorts? They decreased them. So, in terms of the Nasdaq, I'm seeing bullish signs. Okay? I'm seeing bullish signs here. I look at net positions, and all I see is they're increasing their longs. This is bullish to me. So for the technology sector, I'm seeing nothing but more upside is coming. Now, we've got some institutional buying zones that we located on the lower time frames, and we're watching for entries on those areas. So in terms of the Nasdaq, it's like buy signals, okay? The S&P 500 is the one that I'm a little bit more concerned about. Now, is it possible that Nasdaq's going to fly to the upside and the S&P is going to drop? I don't know. I'm just laying out all the data, the portions of the storyline that I've been able to discover, and I will let you sit with that for the time being. I've given you some of my thoughts on what I'm seeing and why I'm trading the positions that I am, and we'll leave you with that. All right, folks. Good session. Did you guys enjoy today? Hope you did. If you want to learn more, www.whiteoakfx.com. Come, join us. We've got an incredible class that we've just started in level 1. We have a level 2 class that has been running. New students get access to all 3 levels of our education. We've never offered that before. We've had a lot of people asking for that for a very long time, so we finally released that. You become a student, you have access to levels 1, 2, and our top level, level 3. All right, you want to learn more? Come and join. We'd love to have you. I see some comments here. Let me see. I'll read some of your comments. Where can we find the videos of you going through the details of those $1 million positions for the euro? Is that in the library for students, members? Yeah, go to the observation journal. Go to Euro US dollar. You'll see everything listed there. Okay. We've also been talking about that trade in the level 3. If you're a new student and you go to level 3, you'll see the sessions there. Okay, here, let me show you. Let me show you what I'm talking about. WhiteOakFX.com. If you're a new student, click on the logo. That'll take you to the student portal. Go to classroom sessions. Click on that. Click on level 3. And we're in the first quarter of 2024. You click on that. And here you go, January 5th. In this session, we took a deeper look at the Euro US dollar $1 million trade. Then we talked about the trade management. Okay. Then we, the last session we did on 19th was a look at all the currency pairs to give an indication of what was likely going to take place with the overall markets. Okay. So it's all there. All right, folks, that's it. Do me a favor, hit the like, leave a comment below. I really appreciate it. I always read your comments, and it always touches my heart and warms my heart whenever I see some nice comments that you guys have been giving me. So I really appreciate the support, really appreciate all the love that you've been giving me. I'm doing my best to offer you guys the best that I can. I gave you these $1 million trades as a freebie just to get you guys excited for 2024. We're going to be doing a lot more of these trades throughout 2024. The vast majority of them are only going to be shared with members. So if you want access to those trades that are extremely high probability, that are low risk, very big reward, and given to you before the moves take place, come and join us. And again, we'd love to have you. Okay? How do you have the data on the Russell 2000? It's on the CFTC website. How does CFTC data help you to predict the market? Well, I just gave you some indication now. All right, that's it. Enjoy, take care, love you all, have a good day, and we'll talk to you later. So long for now.